Hi, today is the 5th of October and today we will again look at the charts of Nifty. Now pay very close attention to the things that we will discuss in this video because lot of those things have got very good educational value. Now if you remember, the last analysis which I posted was on 2nd of October. So this was posted on the 2nd of October here, that is like 3 days back, and where we said that the Nifty correction could be over, and then right then we had a huge rally on the 4th of October. So we actually identified the bottom within a day of the bottom being formed. Similarly, if you go behind and you identify the date of 21st of June, you will see that we identified the bottom which was formed on the 21st of June as well within a day of its being formed. And it is no rocket science. It was explicitly explained in the video why we thought that that was the bottom. And again on the 2nd of October we explained why the bottom was probably in for this down move. So I would urge you to go back and watch that analysis and the previous analysis just to understand how the Elliott wave principle is helping us in analyzing this crazy market action. So now what is going on? So for that, let us go back to the daily chart of the Nifty. The daily chart of the Nifty is right here. So it is right here, the daily chart of the Nifty. And the daily chart of the Nifty, as you know, we have been following this, is large wave 1 from the 2020 low, a double zigzag WXY for wave 2. Then we are entering into wave 3 where we have the first wave of wave 3 done. Then there was the expanded flat for wave 2. Now this flat correction is very interesting. Why? Let me show you. Just watch very carefully. This flat correction probably ended around the 38% retracement of wave 1. Right? Now we also know that in a flat correction, there is one 3-wave decline for wave A, there is a 3-wave rise for wave B, and there is a 5-wave decline for wave C. The common Fibonacci relationship between wave A and wave C is 1.6. So let us see how much did it do. So we take our tool, we measure the distance of wave A and project it from the beginning of wave C. And you see here a beauty. This is it. A 1.61 times wave A was where wave C probably ended. And therefore, we were not selling into this decline. We were looking for opportunities to buy the decline. And in fact, we bought all of this last wave down. Obviously, we had to endure a little bit of pain, but as soon as we had a reversal bar, we bought through the subsequent decline. Now you can say that why was it that the market has been falling for the last 3 or 4 days? So to get that answer, let us go back to the intraday chart of the Nifty. Now this is the 15-minute chart of the Nifty, and as you can see, there was this huge rise on the end of the month. Then there has been a fall. This fall, as you can clearly see, is 3 waves. And also in this fall, the momentum in wave C was less than the momentum in wave A. So this probably told us that this decline was getting kind of exhausted. Let us look at it on 5-minute chart. Can we see anything on the 5-minute chart? No. Okay. So a three-wave decline after an impulsive rise can be counted as wave 1 and wave 2. So even though the market was falling, we knew that this was possibly a wave 2 formation, and therefore we needed to hold on to some long positions, and that is what we did. Obviously we were not completely long, but we were long about 70% of our positions, and 30% was cash, and we were long in Nifty, Bank Nifty, and a number of stocks. And market obliged nicely with a huge gap up which never got sold into. So the preferable wave count is that this is wave 1 and this is wave 2 and wave 3 up is starting. This is what? This is the wave 3 up of the third wave. Now that is very interesting. Let us go back to the daily chart to show the context. The context is very important. The context was that we had a large first wave, a second wave, then a first wave of 3, then the 2 of 3, and the 3 of 3 is likely beginning. And as we know, third waves of large degrees are extremely beautiful. They are extremely large, they are extremely big, and they take out large price moves. So that is our preferred working count on this chart. What are the things which support this count? One is the large degree of breadth. The breadth is fantastic in this market. And the other thing is new highs, new lows. You can see that they are making many new highs than many new lows. And then obviously momentum signatures are there, which we will not go into detail at this time. So if this is wave 3 in action, which we have to see still, then we will see huge price moves to the upside, maybe big gaps, and this high of 18,100 should be taken out very, very soon. Obviously the target would be much higher, but we will come to that in later days once we have enough price action under our belt. Now, is there an alternative count? Yes, there is. This again coming back to 15-minute chart. The alternative count is that this is still a corrective wave, and therefore we will say that wave C is not done here. This is wave 3 of C, and wave 4 of C is becoming, and wave 5 will go down to newer lows, and then the down move will end. That is an alternative count, still valid, but I would think that is the second possibility. But we will be keeping a watch on that. When does that count becomes invalid, and we will go firmly with the bullish count? When this wave 1 low taken out. So this is important. This low of 17,470 to 80, if this is taken out, then this move is done and we are off to the races on the upside. But otherwise also there are beautiful patterns in individual charts which I think all serious students of Elliott wave should go and examine, because there are serious money making opportunities right there. I mean, you'll be amazed to see those patterns. As you all know, wave 3 are a sight to wonder, are a sight to behold. We do not know why this is happening. We do not know the fundamentals, but we can say with fair degree of conviction that we are onto something very big. So that's all for today. I hope you enjoy this longer video because I presented some facts and some basics of the Elliott wave principle which help us in identifying lows almost to the day and keep you on the right side of the market. So if you like this video, do make a comment, do subscribe, and do share with your friends and family. And till next time, bye bye, all the best and great trading. Thank you.